Good morning, everybody. Today I'll give you exercise which is related in chapter 1, and we will, study together how can we, analyze the transaction of one of the companies here. As you see in this exercises, the first exercise 2.1 in our chapter 2. Let's see together here. We have some transactions. One of the, for example, one of the companies like Wainwright Corporation. This is the transaction taken, and we want to make analyze for this transaction and how can we, record it in our journals and ledgers, and how to prepare our trial balance. This is here. We have 9 transactions, which is taken here by the corporation, and this is the first transaction. What they want here, we want to analyze this transaction and we want to see how the effect of each of this accounting here in our accounting equation for this corporation. Let's ask here to take and this exercise the first transaction and read it together and we will solve it. First transaction says issued 30,000 ordinary shares. We are talking here about shares. You see here, we are talking about shares, not amount. It is here, number of shares you see here, and the total or the cost of these shares, which is issued, was 300,000 riyal. Okay. And then purchase equipment, purchase inventory, credit sales, as it's mentioned here, credit, credit sales, you see here, credit sales, and as we see here, we have started buying, selling some equipment. So I will see together here how to start the first transaction. Okay, what we want to know here, we want to understand each one of these transactions, how is the effect on our balance sheet or on the accounting equation. What does the accounting equation says? It says assets here equal liabilities plus issued capital plus retained earnings. And you see here, this is the first transaction. Show us here 30,000, and you see here the transaction. That means since we issue the shares here and sell it, we will receive 300 as a cash. What happened to the cash here? It's a plus. A plus, that means our company, our cash increased. This is in chapter 1 that we just. I would like to remind you about the accounting equation and how this transaction affect on this equation. And at the same time, this is the asset side. Let's go to the other side. I mean the right side of our account equation. It is what is the other side effect? It is on a capital, share capital or the capital. It affected by the same amount, must be equal. You see here, assets equal liabilities. That means here we receive a cash for 300,000, and this at the same time the capital should be is the same amount, and so on. This is example how to analyze. We will show you here how can solve all these transactions, inshallah. And the second requirement here in exercise 2.2, after we solve all these transactions and see the effect of this transaction, it's required from us to prepare journal entries on these transactions, which is in the exercise 2.1. Okay. We want to know the exercise here 2.3. After we prepare our journal entries, we want to post the journal, the entries here to T account. We want to post the journals to T account, and it's assume here all accounts, for all accounts, it has opening balances as a 0. That means we start, because this is we start our operation in the company here. And so, because we didn't run our business, this is the first time we want to run a business. Let's assume that there is no balances at the beginning of the period. It should be equal 0, as is assumed here in our question. And then after here, we post our journals. We want to prepare the last thing here, or last yeah, to prepare our trial balance from the ending accounting balances, or based on the balance of the account at the end of the period. Okay, let's go back here to the 9 transaction as it's mentioned here. I'll show you here how to solve this question. Let's go to here, and this is the exercise 2.1, and we'll see here. As we solve the first transaction as issued ordinary shares, 30 ordinary, and you know the total, it was 300. You see here, 30 ordinary. That's mean the price per share. Yeah, it's easy to understand. The price of share, it was a 10 riyal. Since you multiply 10 riyal by 3,000, it will give you 300,000 directly. Let's go to the second transaction. Purchased equipment at cost of 40,000, 10,000 cash was paid, and note payable was signed for the balance owed. What does that mean here? That means the company purchased equipment, and the cost of this equipment was 40,000. The company paid cash 10,000, and the remaining amount, the company signed note payable. Okay, what the effect of this transaction in our accounting equation? Let's see together here the effect. The effect here, that's mean we pay 10,000 as a cash. That's meaning we decrease our cash balance or cash account. Decrease. You see here it's minus. You see it is minus here, minus cash, and at the same time, the equipment as one of the long-term assets or fixed assets as equipment here increased by 40,000. This is our asset increased. Our asset also decreased. This is here cash as a current asset, equipment as long-term assets increased, here decreased. At the same time, if you want to go to the other side, why not payable? Because the remaining amount must be owed, or the balance owed, be paid later to the supplier. It is 30,000. How can we get the 30,000 here? Because we are applying to see the effect this second transaction on our accounting equation, assets equal liability plus owner equity and retained earnings. That's mean here 40,000. The total cost of equipment minus 10,000 as a cash paid. The remaining amount will be 30,000 as a note payable, because we assigned. You know, we assigned here, it's assigned. Okay, the third transaction here, you see third transaction, let me show you here. Purchase inventory on account at cost of 90,000 purchase. That means the company purchased inventory. That's here accrual. We are applying accrual accounting. You know, accrual accounting model. That means the company purchased, but it did not pay as a cash. The amount will be paid later. You see here, we have now create 2 accounts. The first 2 accounts, inventory as a current assets, inventory here as a current assets, 90,000 increased here, the amount here. And at the same time, the liability also increased by as accounts payable and the liability. You see here, it is the liability by the same amount. Let's go to the number 4. Transaction credit sales. Credit sales. What do you mean credit sales? What do you mean credit sales? For the month, total of 120,000. The cost of goods sold was 70,000. Here we have two transactions in number 4 here affected on our accounting equation. What the first one? The company sold one of its merchandise, sell it by 120,000. This is it. That's mean here we have the first account, we call it account receivable as a current assets. The amount will receive it. This amount will receive it later, and at the same time, you see here, at the same time, we get a revenue. We get the revenue by 120,000, and it comes under retained earnings. You see here, and increase here, increase at the same time. Accounts receivable increase. Accounts receivable increase. That is one of the current assets. Should be here under assets here. And at the same time, because inventory here, the cost of sales or of cost of goods sold, it was 70,000. That means our inventory here, because we sold some of inventory to the customer, we sold it by 70,000. That means inventory balance will be decreased by 70,000. And at the same time, the cost of goods sold as expenses here, it comes under retained earnings and as a minus or decreased. Okay. Number 5, you see number 5 here. We will see number 5. It is paid 5,000 rent for the warehouse building for the month of March. That means the company paid the rent here for the month, and the amount of rent, it was 5,000. The expense here, the cash will decrease. You see here, the cash decreased by this amount as a 5,000 here. The cash decreased by this amount, and at the same time, in the other side of account equation, it affects by 5,000 as expenses. You see here, decrease. And this here, decrease. Here, increase. Because mostly the accounting equation must be equalized or equal. Number 6, you see number 6. If you want to go to number 6 here, paid 6,000 to insurance company for its fire and liability insurance. It was for a 1 year, for a 1 year period. Here, that's mean for a 1 year period. Number 6 here, our insurance policy, the company purchased insurance policy. The policy here, cost of policy was 6,000, and you know it is for a 1 year. It is for 1 year. You see here, for 1 year. As we see here, number 6 here. Let's go to number 6. You see the cash, because we paid, the cost of insurance policy by 6,000. It must be increased here at the same time here. This is one of the assets as a current asset. At the same time, we have a current asset here, the prepaid insurance, because still the company did not get any benefits of the amount paid as an insurance policy, because we will start, this month, to get some benefits of the amount paid as insurance policy. Number 7, you see here, number 7, it is here 70,000 on account. The merchandise purchasing we paid. That means the amount which is owed to the supplier. We have to pay some of this amount here. Just we pay of 90,000. We paid 70,000 here. That means account balance here 90,000 will be decreased by the amount which paid to the supplier by the amount paid is 70,000. And at the same time, the cash will be decreased. You see here, our assets here as a cash decrease, and liabilities as account payable decrease at the same thing here. Number 8, you see here, collected 50,000 from customer on account, because we sold some goods or inventory here. We sold it to our customer, and here now we received from because we are applying accrual accounting here, we receive 55,000. That means our account receivable as current assets must be decreased by the amount which we collected from our customer, and at the same time we increased our cash by the same, because we collected. Since we collected or received the cash, it must be increased or should be increased. The last thing here, it is we have a depreciation on our equipment, which is per share. For the month here, it is 1,000 here. The amount exists for the 1,000 just for 1 month here. We have two accounts here affected in our account equation. The first one, it was as accumulated depreciation must be decreased, and the expense here goes to the accumulated depreciation will be decreased at the same time. And since we will, I mean, go to explain another things here. We will deduct this amount here from the equipment cost since we prepare our balance sheet. Okay, that let's go to the other to the second exercise here. They want to journal interest to record each of the transaction. If we go back to the first transaction issued 300, and you see the cash received 300, that's mean the debit will be as here, the debit will be as a cash received by 300,000, and the credit it will be a share capital. The second transaction as equipment, we purchased 40,000 equipment. This is the cost as asset here, and not payable here as a liability by 30,000, and the amount which we paid as a cash here, 10,000. You notice here the difference between equipment as a debit and the cash as a credit here, it will be 30,000 as a not payable. Also, in the transaction number 3, you see here, the company purchased inventory, and the inventory here, it was on account. So the current asset as inventory will be debit by 90,000, and accounts will be credit by 90,000. Number 4, you see the company sold some of goods or inventory, and the credit sales here as credit sales we are applying as I said accrual accounting model. It will be debit as account receivable. It is one of the current assets here, and sales revenue 120,000 as a credit. And at the same time, the cost of goods sold, it was 70,000. So the debit will be 70,000. The credit will be also inventory 70,000. And you see, we pay a rent. We pay rent for the company here by 5,000. That means the cash decreased by this amount here must be credit, and because it is decreased, cash decrease because we pay as a rent expenses as a cash. At the same time, you see, we purchased insurance policy because still we didn't get any benefits of our insurance policy. The prepared insurance, it will be as a current assets, as a debit, and the credit will be cash in this amount here. And number 7, it will be accounts payable, because we pay, I mean, to a supplier some of the amount of the balance owed, the 70,000, and the cash will be credit decreased by the amount which paid to our suppliers. And at the same time here, we collect from our account receivable balance. It will be decreased by the amount which collected. The cash will be debited by this amount. That means our cash increase here, and the accounts receivable balance will be decreased by this amount. The last thing here, depreciation expense as we use the equipment here during the specific period. That means during the month it was 1,000, and the accumulated depreciation as credit by this amount. And here you see the second exercise 2-3 ask us here to post all journals here from 1 to 9. We want to post it to T accounts, that means, or to ledgers. Since we want to, this is the T account here. All the balances balances we assumed here as in this question, the balances at the beginning of the period, beginning of the month, it was 0 in all accounts here. All accounts, you see, or we call it opening balance 0 in all accounts. At the same time here, the transaction for just we are posting this transaction. Any transaction debit, we put a debit. Any transaction which is in the same transaction credit or any other. If we have more than one account, we have to post this account which is appropriate to each one of these accounts here, as you see here. Yeah, as you see here, this is more than one account here as cash collected here, 355, and cash here paid from transaction 2, transaction 5, transaction 6, transaction 7. Since the summation of this amount here minus the total of the debit here, it will be the difference between debit and credit. It will be, which is the greater, it will be the balance, whether it's debit or credit. In this case here, for example, debit here, debit total debit here greater than or greater than credit, total credit. So the balance will be a difference between them, 264. And same thing, inventory. If we have just one transaction, we put it as it is. There is no change. Such as, for example, prepared insurance. This is the balance at the beginning of the period for this account here, and we will pay for insurance 6,000. So there is no change now because we have just one transaction as a 6,000. The same thing here, accumulated depreciation. Just we have one action here, or in this transaction, and the same thing here. You see, we have here two transactions in number 7 and number 3. We have here one transaction, and then you have to find the balance for each one of these things here. The last year, or the capital, it was 300,000, which is taken from transaction 1 as it is in our journal posting from general journals. And then the last thing here, after you finish, you have to prepare your income statement as it is here. It says revenue, cost of goods sold, and you see rent expenses and depreciation expenses. This is the accounts, which is TT accounts, which are related to income statement. And the last thing here, how to prepare your trial balance. It's very easy. Just open three columns. This is the first column, and write all these accounts here, and you see this is the account balance which is taken from T account. This is the account balance which is taken also. All these accounts here taken from T account balances as is, or from ledgers. At the same thing here, the equipment, you see accumulated depreciation and credit as a credit here, and then you have to the summation here. Total debit must equal total credit. Total debit must equal total credit. I hope to, get this is information as a review of which is we studied together, which we studied before in accounting 1 and accounting 2. Thank you for listening.